We might get started. Welcome to this webinar about shareholder action and how to use your money to change the behaviour of big polluters. My name is Taryn Da Costa and I'm the Climate Emergency Engagement Officer here at Yarra City Council, and I'll be moderating tonight's session. So I'd like to start tonight's event by acknowledging the Wurundjeri Woiwurrung people as the traditional owners and true sovereigns of the land that we call Yarra. We also acknowledge the significant contributions made by other Aboriginal and Torres Strait Islander people to the life in Yarra, and we pay our respects to elders of all nations and to their elders, past, present and future. So welcome to tonight's webinar. At Yarra, we are committed to responding to the climate emergency, and we were one of the first councils to declare a climate emergency. Part of our climate emergency plan is to support individuals and households to take climate action in a number of different ways. And one of those ways that we've had a lot of community interest in has been around how to take climate action through our financial behaviour, and essentially how to use our money for good and align our financial behaviour with our values, which is why we're hosting this event tonight. Last week, we hosted an online event, which will be up on our website shortly, and we heard from market forces and ethical investment services about divestment and moving your money away from fossil fuels and advocating through our banking, insurance and superannuation. Tonight, we'll be discussing a slightly different approach. It's still in that space of advocacy and engagement, but we'll be hearing from the Australasian Centre for Corporate Responsibility about how to keep a small shareholding to influence the behaviour of big companies, big polluting companies, and how to use a shareholding to hold them to account. We have to give you a heads up that this event is meant for general advice only and about the topic of shareholder action. We are not giving any specific financial advice, and if you are after that, we recommend that you reach out to financial advisors or financial professionals for that. So before I introduce you to Bryn O'Brien, the Executive Director at ACCR, just a couple of housekeeping notes. This webinar will be recorded, so please do keep your cameras off, and to avoid any background noise and disturbances, you can keep yourselves on mute as well. So feel free to just relax and have your dinner or do whatever you need to do and listen along. We will have time for questions after Bryn tells us a little bit more about herself and her work. We ask that for this webinar that you use the Q&A function, which you can see at the bottom of your screen. So not the chat function, but the Q&A function at the bottom of your screen. All right, so it's now my pleasure to tell you a little bit more about Bryn. And I think Bryn's got her camera on so she can listen along, and I'm blush as I tell you all these wonderful things about her. So Bryn O'Brien is the Executive Director of the Australasian Centre for Corporate Responsibility, ACCR. As the Executive Director of ACCR, Bryn leads a multidisciplinary team that conducts in-depth research, engages and collaborates with major institutional investors, and undertakes assertive shareholder engagement with major listed companies globally. Her purpose is to drive real-world emissions reductions across these companies. Bryn is an experienced lawyer and strategist with expertise in corporate governance, shareholder engagement and stewardship. In 2022, she was named in the Australian Business Review's Top 100 Green Power Players and is a leading commentator on how the corporate sector navigates the climate crisis in Australian and international media. Under Bryn's stewardship, ACCR has been part of the successful blocking of the demerger of Australia's largest corporate emitter, AGL, driven collaborative engagement between major asset owners and Japanese listed companies, and commenced a world-first greenwashing case against Australian oil and gas producer Santos. Bryn sits on the advisory board of Follow This and is a director of Diplomacy Training Program Limited. Prior to joining ACCR in January 2017, she worked as a consultant and advisor on business and human rights projects and practiced as a corporations and international lawyer. She holds a Master of Law from Columbia Law School and a dual Bachelor of Law, Bachelor of Medical Science from the University of Technology, Sydney. So, Brina, I'm going to pass it over to you now, excuse me, to tell us more about your work and what you do with your team at ACCR. Oh, excuse me. And yeah, and tell us all about the impacts it can have on climate.
Thanks so much, Taryn. Thank you, Taryn. And I'll need to remember to shorten that introduction because it was extensive and yeah, a little intense. But yes, hello, I'm Bryn, ex-lawyer, still do a lot of things with the law. So ACCR, Shareholder Advocacy Group, our power is through the Corporations Act in Australia and in other jurisdictions in which we operate. You've heard a little bit about how we have a portfolio of Japanese listed companies. We also have some European listed companies, and we're looking to take on other companies around the world because at this moment in time, greenhouse gas emissions anywhere are a problem everywhere. So we really are an Australian-based organisation with global impact and global stock coverage. Let me just step back for a second and kind of like focus on, you know, where we are at this moment in time. One of the pitfalls of working in climate advocacy is that it's easy to become overly focused on the bleakness and the scale and the intractability of the climate emergency. And really we are facing something extraordinary, and we're facing a huge challenge. It's an inspiration to me to see local councils like Yarra City putting climate emergency at the centre of their activities and using that language and hosting events like this and seeing community members show up. It really is, you know, local government in this country is where so much incredible work has happened. But I understand it. We are in an incredibly difficult situation. And, you know, one of my motivations is to work out how to get to scale in our activities, how to make them more powerful quickly. And it's important to understand that we are making progress. I'm going to give you some examples of that, but we are making progress. Shareholder advocacy is a place where you, as a concerned citizen, can make a difference. And as we know, rapid decarbonisation of the global economy is essential. Every fraction of a degree counts. Every pipeline counts. Every project counts. Every drill site counts. And you know, every ton of carbon that we can keep from going into the atmosphere will have an impact on the livability of our planet for us and for future generations. So from that point of bleakness, though, I really want to emphasise that momentum for decarbonisation, particularly within the investment sector, and I'll come back to the investment sector in a lot of different ways over the course of the next 15 minutes or so. Momentum is building. We are, ACCR, is working with investors who are increasingly understanding that when a high-emitting company chooses to transform, decides to transform, puts in place the strategy to transform, that is good not only for the planet, but also for their long-term financial interests, because the emissions trajectory that we're on at the moment puts at risk not only you know, the lives of every living being on Earth, but also the stability of financial markets. And as kind of trivial as that sounds, financial institutions are motivated in this moment in time to care more about financial markets than they are about the livability of every being on Earth. So I guess one of the things that we try to do at ACCR is to speak the language that counts in a moment. And for the financial sector, that is the language of corporations law, of fiduciary duty, of financial markets. And it's pretty extraordinary over a certain horizon how closely aligned the risk to humanity and the risk to financial markets are. So I want to take you to some of the really, really big wins happening over the last year. And Taryn has already mentioned one really exciting campaign that we were involved in. I guess we were involved last year, but it's a company that we've been covering for more than 10 years. So I've been in this role at ACCR for 6 years, and my predecessors, Caroline Lakuta and Howard Pender, were involved before me, and that's AGL. So AGL, Australia's largest corporate greenhouse gas emitter, responsible for roughly 8% of Australia's emissions, operator of major coal-fired power operations, and coal-fired power, we know, to align with the Paris Agreement in OECD countries, as Australia is, needs to be really wound down out to 2030. So ACCR started engaging with AGL more than a decade ago. When I took on this role 6 years ago, continued the engagement, really started to ramp up 3 years ago. So we put a series of shareholder resolutions to AGL. I'll come back to shareholder resolutions. That's one of the tools that we use, and one of the tools that's available to regular people in the community to engage with major listed companies in collaboration with other regular people. So we filed a series of shareholder resolutions to AGL. In 2021, we got a majority vote on a shareholder resolution. This was at the point that AGL had announced it was going to demerge into two companies, Clean Co and Dirty Co, and they were going to put all the coal-fired assets in Dirty Co. But they, at that point, had no plan to bring Dirty Co into alignment with the Paris Agreement. So ACCR and our community of more than 100 wonderful shareholders put a shareholder resolution to AGL, and we asked for the company to set out Paris-aligned pathways for both of those companies, Clean Co and Dirty Co. And a majority, miraculously, a majority of shareholders who voted on that resolution agreed with us. So there was a 53% vote at AGL in 2021. And having spoken to, and so fast forward to 2022, where AGL's board is, there are a bunch of resignations and then new nominations and a successful campaign for them to be elected. That was run by Mike Cannon-Brooks's Grok Ventures, which is his private investment vehicle. The kind of seedling of that incredible tree that resulted in the nomination and election of those directors, that seed was planted back in when ACCR got that majority vote in 2021, that 53% vote of shareholders saying we actually want Paris-aligned decarbonisation strategy. So over that year, between those two AGMs, ACCR worked with many investors, including when it was appropriate for us to do so, Grok Ventures, on a bunch of different strategies, ultimately culminating in Grok Ventures' nomination of 4 climate competent directors to the AGL board, and campaigned around the election of those directors and were successful. So it was an incredible moment in Australian corporate history. AGL has made some big shifts. They've brought forward, even before those directors were elected, owing to the incredible pressure that the investment sector, including superannuation funds, put on to AGL. So the major shareholders of AGL communicated their demands not only through the vote but also through private meetings. That resulted in decisions like coal-fired power stations being the closure dates being brought forward a full decade. They're still not in line with Paris, is what I would say. They need to go harder. But what the decisions that have been made so far mean that up to 200 megatons, so 200 million tonnes of CO2 equivalent, will not be released into the atmosphere. And for ACCR, for me and for my team, that is what counts. The kind of fuzzy target setting that is a strategy, or I think companies starting to set targets that don't correlate to real world emissions outcomes would have been an acceptable thing for us 3 or 4 years ago. It no longer is. We now are doing the modelling, pushing the companies to know what their decision making, what the changes to company strategy that they're making, what results that will have in terms of real world emissions outcomes. So it's, the AGL, the 200 megatons that have so far been projected to be avoided at AGL, it's a small bite of the enormous carbon footprint that industry has around the world. But again, if our goal is maintaining a livable planet, then every tonne of carbon counts. Every coal-fired power station, every pipeline, every drill site. And these are all actions that have happened because of sustained shareholder pressure. So the to get to the spicy bit of this conversation, the pressure that was brought to bear on AGL, the pressure that was brought to bear on, and the rights of shareholders that were exercised through voting at that AGM, they were exercised. That pressure was brought to bear by shareholders in the company. It wasn't brought to bear by shareholders who were divested, and that's why I say it's spicy. Divestment has been a powerful signalling tool for the environmental movement over the last decade and a half. And I guess the contentious proposition that I put is that while it's been a powerful signalling tool, there's no evidence to suggest that it's actually been a powerful emissions reductions tool. And the moment that we're kind of going into over the next 3 years, which are absolutely critical for our decarbonisation trajectory, is we need to achieve changes to company strategy, and changes to company strategy will not be achieved by the investors who have divested. They will be achieved by the investors who continue to invest and to engage, not through kind of private, comfortable conversations, but through the exercise of their formal rights as shareholders to decarbonise the company. So I'm going to take you now to, I guess there's two other things I want to cover. One is how the the tools that shareholders have, that major institutional shareholders have, to decarbonise companies. But before I get to that, I want to just take you to the tools that regular people have to have meaningful influence over the climate position or activeness of large Australian companies. So I'll come back to the ultimate outcome, the exercise of rights by major institutions, and I'll start with regular people. So ACCR is essentially a club for small shareholders who see the connection between responsible business conduct and long-term returns across their portfolio, or who just take out a small shareholding in order to help us influence companies. Under Australian law, 100 shareholders or shareholders holding 5% of a company can band together. So we go for the 100 shareholder rule. The 5% rule is usually beyond what our community can get to, although if we're working with major institutions, that's another story. But generally, the way that we approach companies and we get these items on the agenda for their annual meetings is we have a community of 100 or hopefully 120 or 250 individual shareholders in these companies. And that is the only way that we can access this right. That is the only way that we can either get an item on the agenda for discussion at an AGM or make a statement of members that gets put into the company's notice of meeting. So our community of shareholders is incredibly important. To go to the kind of technical side of it, the minimum amount of shares that you can generally buy on any platform is $500 in any single company. So I'm not going to pretend that that's not a lot of money. Of course it is. And so no stress if that's not something that you can do. There's plenty of other ways that you can be a part of this work. But that we need 100 shareholders essentially who are prepared to buy a minimum holding of $500 in a company who then allow us to use a very limited right, which is just the right to file shareholder resolutions. We don't have the right to vote your shares. We don't have the right to sell your shares or buy more shares. We just have the right to file resolutions. So we've got a community that for each company of 100 shareholders or more who give us that right, who enter into an agency agreement with us. So ACCR, along with our supporters, are generally small shareholders in a bunch of major Australian companies and a handful of global listed companies. We hold major mining companies like BHP and Rio Tinto. We hold steel makers, oil and gas companies, coal-fired power, utilities, and we are extremely motivated to change them. So, it's that generally people think of this kind of right that you have as a shareholder to attend an AGM and to vote. But what we help regular shareholders access is this collective right that can only be exercised by 100 shareholders acting together, or shareholders with 5% of the company. So filing a shareholder resolution or a member's statement creates a moment for the private views of major shareholders, and I'll come back to that, but major investors to come out in public. So if you put a shareholder resolution to an oil and gas company and you ask them for a strategy aligned with the Paris Agreement, then shareholders can vote on whether they believe that that should happen or not. And interestingly enough, although it makes a lot of rational sense, there is a large bulk of major global institutional investors who are aware of climate change and who see it as a fundamental risk to the health of their portfolios over the long term, who make that connection between climate change and the stability of society and financial markets, and who bring that connection together through the actions across their portfolio. So let me go then to major institutional investors. And Taryn, please interrupt me if I've gone on for too long, but I'll take another sort of 2 or 3 minutes to kind of just address how we work with major institutional shareholders.
Sounds good. Yeah, absolutely.
Okay, so sometimes our 100 shareholders includes major institutional shareholders. And so really fascinating thing about this line of work is that an individual holding $500 in shares, in terms of getting to that 100, is one individual, just like a super fund holding $100 billion is one. So sometimes we file shareholder resolutions with major institutional investors, and I'll give you an example of that. Glencore, which is Australia's, it's the world's largest coal trader. I think it's Australia's largest coal miner. It's listed on the London Stock Exchange and it's headquartered in Jersey, which is a very difficult company to engage with. They are still on a pathway, even though the International Energy Agency has said that no more coal and gas is aligned with the Paris Agreement. They're kind of saying that they align with the Paris Agreement in some way, but they're still on a pathway of expanding further coal. So ACCR has been engaging with Glencore over a bit more than a year, but we've really ramped up our engagement over the last 12 months. My colleague Naomi Hogan, who some of you may know from previous work at Lock the Gate, is leading this work, and she's an incredible strategist. We have been involved in research and analysis over the last 12 months that has started to show the way for Glencore to align with the Paris Agreement. And long story short, this research was published just in the last couple of days. But long story short, there are decisions that Glencore could make in relation to a handful of thermal coal mines that would bring its strategy much closer to alignment with a livable planet, with the objectives of the Paris Agreement. And there are institutional investors among Glencore's shareholders who are very motivated to see them make those decisions. So we've got a shareholder resolution on foot at the moment. It will be voted on at Glencore's AGM before the middle of the year. That shareholder resolution was supported by in Jersey, it's 50 shareholders, so it's not 100 shareholders, but 50 shareholders, individual people like the people on this call, as well as $3 trillion of assets under management. So HSBC Asset Management, the Man Group, really Legal in General, just major institutional investors who are really motivated to get the companies in their portfolio to decarbonise. So that's happening at the moment. We're having some incredible conversations with the global institutional investment sector, and we're putting out research and we're getting incredible feedback, and that will be voted on soon. But over the course of the last 12 months, owing to various factors, including, I guess, the geopolitical environment broadly, but also that Glencore has been hearing from its investors regularly that it is not aligned with the Paris Agreement and that there are easy ways for it to get in line with the Paris Agreement. Glencore has made two major decisions about not going forward with major coal mining operations. And those two decisions have resulted in roughly 2 gigatons, so 2 billion tonnes of carbon dioxide equivalent not going into the atmosphere. So, that is something that we can only achieve with both the support and collaboration of regular people who hold small shareholdings in major listed companies, and the active engagement and stewardship of major institutional investors. And again, those changes have been made, or those changes have been pushed for and achieved by those invested in the company rather than those who have divested from the company. And while I absolutely understand that investment and divestment are personal decisions, and I would never judge people for the personal decisions that they make, there is an opportunity there to take small shareholdings in major emitters and use those shareholdings in collaboration with institutional investors to decarbonise them. So I will, with your blessing, Taryn, open it up to Q&A at this moment.
Thanks so much, Bryn. I really, I think those real world examples are fabulous and really exciting to hear about. So thanks for sharing. We have got some great questions coming through to the chat, so I'll start reading them out to you. And so the first question is from Catherine, and she is asking a question that's related to transport. And she's mentioned that the Yarra Council Climate Emergency Plan shows that the far biggest action we can take as individuals to reduce emissions is to not drive a car, and to drive and walk more, cycle more, take public transport, etc. So she's wondering, how can I persuade super funds and councils to persuade them to reduce financing more car traffic? So, for example, oil companies, fossil fuel cars, tollway operators, builders, and she gives them examples of companies such as Transurban, John Holland, and the banks that finance these. So do you have a...
Wow, that is a big question, Catherine. No, I mean, it's absolutely valid. And I think you're looking at it from the right way in terms of this is a systems problem. So people are only able to not use cars if they have available kind of services within a small distance and public transport. So I think that there's a range of corporate and policy levers that can be brought to bear. Probably the policy levers are and the planning levers, those that kind of need to be put in place. But I also think that the demand side levers, as in the you might not find it surprising, but corporations that profit from roads, tollways, cars, oil, are active lobbyists in, delaying good public transport options. So I think, that just being aware of that, having conversations with your super funds about the impact of lobbying by companies in their portfolio. It's an area of focus for us. I talked really only about the decarbonisation, like kind of direct emissions outcomes of our work, but we do have a kind of quite large body of work in relation to corporate political influence. I think that's a really important conversation to have with investors.
And I think we'll have some more questions probably around that sort of engagement stuff. So we'll probably come back to that. But thank you for your question, Catherine. Lisa has given you a big thank you, Bryn, and asked, what advice do you have for those of us who might consider buying shares for activist purposes? So for around $500, say.
So get on board. That's my main thing, is like, so my personal share portfolio is the ugliest thing you will ever see in your life. If all you knew about me was the shares that I hold, you would definitely not think I was a climate activist. You would think that I was just someone who didn't care at all about the climate and just wanted to maximize returns. Although I should say that's quite cyclical. So sometimes, like a couple of years ago, my oil and gas diversified mining portfolio, utilities portfolio was not doing well. And now, just because of, geopolitical issues, it is, and that's kind of not the point. So what advice would I give you? It would just be join the club, like go to our shareholder hub, get in touch with our incredible shareholder hub manager, Alia Hutchison, who is based in Perth, just outside of Perth, based in Western Australia. Fabulous contact. She will explain everything, and we have a bunch of really easy materials that can make it hopefully as smooth as possible in starting the journey.
Thank you. Yes, and we've shared some of your information about getting in touch with ACCR, so we'll share that again. And we've got another question from Shane, and Shane has asked, how do we get the managers which manage the fastest growing sector of the market, such as index funds, to take their corporate governance responsibilities seriously, in particular recalcitrants such as Vanguard?
Oh, this is so just for other participants on the call who don't know what Vanguard is, I think, the second largest passive asset manager in the world, second to BlackRock. They probably manage 6 or 7 trillion US dollars of assets under management, of sometimes big asset owner money, and then sometimes retail asset shareholder money. And they have a pretty terrible record on climate. They're invested, so index funds that hold the whole index. They hold, every company across the major, like the largest, 2,000 companies across every stock exchange in the world. And so, and they're under, in the United States, might be a little bit too much detail, so I'll try to be quick, but in the United States, those kinds of asset managers are under incredible political pressure, actually, to not decarbonise, to not be woke, as in there's kind of this culture war going on in the United States. Now, wokeness is irrelevant to asset managers. Really, what Vanguard and others in making decisions to engage with companies to mitigate climate risk, what they're doing is managing risk, which is the core job of an investor, and in particular an asset manager. So there's this technical term, not technical, but I guess there's a term of art out there called universal ownership, which means that you are like Vanguard or BlackRock, you hold the whole index. Universal owners are incredibly vulnerable to climate risk. They can't run from it. They can't just divest away from the oil and gas companies because they think that they're going to go belly up. They can't just divest away from the property investment companies because they think that their resorts along the east coast of the United States are going to be inundated by rising waters. So the only real mitigation that a universal owner kind of investor like Vanguard and BlackRock can do is aggressively decarbonising companies in their portfolio. So using their rights, staying invested, using their rights to decarbonise the companies, which means that emissions don't go into the atmosphere, which is the only real thing we can do to prevent catastrophic climate change. As much as we kind of talk about how complicated the problem is, and certainly, energy transition does have its complexities, the problem fundamentally is incredibly simple. It is we need to prevent emissions from being emitted. So I don't quite know how we get Vanguard to adopt this universal owner mentality. It's something I think about a lot. But that is the key, that Vanguard and BlackRock and State Street and Fidelity, the huge passive asset managers of the world, truly understanding their responsibility, their fiduciary responsibility as universal owners, and that the power that they have to decarbonise companies in their portfolio by using voting, board renewal, shareholder resolutions, legal strategy. When they understand that power, then we're going to start, that's the hypothesis, then we start getting change.
There is another question that's sort of similar, and I'm just going to follow on if it, hopefully it's not too similar, but as someone who has extensive experience representing shareholders at AGMs, do you often see boards or directors who are not aligning their businesses with what shareholders are asking for? So linked to that question from Shane around, that concern around governance issues, when they're not listening or they're not acting on what's being voted on in the AGMs, do you see that a lot? And what can we do about it if we do see it?
Yeah, it's so yes, we see it a lot, and we see it. So shareholder activism and kind of shareholder resolutions have evolved a lot in the last 5 or 6 years, and they're getting pointier and more specific. So I think when we started off, we were asking for fuzzier sort of targets. So it was a really important work at the time, but where we've gotten to at the moment is we're actually asking companies to align their capital expenditure, their remuneration structures and their targets with the Paris Agreement. And that's quite pointy ask. There's not a lot of place for company directors to hide. And as a result, we do see non-responsiveness to shareholder demands, even shareholder demands. So Woodside, Australia's largest oil and gas company, last year, so 2021, we negotiated with them to put a say on climate vote, so a vote on a climate transition plan to their shareholders. They thought they had done a great plan. They put that vote to their shareholders, and almost half of their shareholders, so 49+% of their shareholders, rejected that plan last year. Has Woodside responded to that? No. Woodside have doubled down on their strategy, which is oil and gas expansion beyond not only what the IPCC and the Paris Agreement kind of say, but also what the International Energy Agency says is possible to remain within an appropriate carbon budget. So I guess the question then that follows on from that, so yes, we see non-responsiveness and yes, we see poor governance. Where is that going to go? And I think that's what we saw with AGL. We saw non-responsiveness, and where it went was a bunch of directors resigned and a bunch of new directors were nominated and elected. I don't know that directors of oil and gas companies are going to resign. So I think we are going to come into a public contest about company strategy. What does an appropriate strategy for a fossil fuels company look like going forward? Is it keep expanding forever and keep promising that you're going to offset or capture your emissions, neither of which strategies are proven to actually deliver on the core, which is emissions reduction? Or are you going to start to make different kinds of decisions? So not invest in these $5 billion project and return that capital to your shareholders in the form of dividends. So I think we're going to start seeing that contest around company strategy happening publicly, and how that relates to kind of regular shareholders, retail shareholders, is we need regular shareholders to help us escalate with companies, so to be part of our 100 in order to generate that contest. But the generation of that contest will come through us. So that's really where we're looking forward to. And ultimately, if boards are unresponsive to shareholder concerns, then we and other shareholders may take action to replace them.
Hold them to account. Good on you. It's great. Lisa has asked another question, a separate follow-up to, I think, something she asked earlier. So she was saying that she works for a charity that is increasingly taking funds from fossil fuel proponents without any conditions. And she asks, what advice do you have for those of us?
Oh,
sorry.
Goodness, such a hard one. I think it probably depends on the purpose of the charity. It's a really hard one. So ACCR, we're funded by philanthropy. We don't, I guess, ask our donors about where they have made their money necessarily. We don't go behind the kind of corporate veil. It might be obvious to us, but it's not like we do a lot of investigation. So I just want to be clear about that. I think it depends on the conditions that are attached to the funding. If the condition of funding is that you can't criticise fossil fuels developments, then I would think that would be an unattractive donation. But if there are no conditions attached, it might be another matter altogether. So, to give you an example, the Rockefeller family, who are the US kind of made huge wealth from oil and gas, and split their companies into Exxon and Chevron and so on. They are some of the biggest climate donors in the world. So I think it's complex, but thank you for the question.
Thanks, Bryn. This is a question from an anonymous person who said that this is all very super insightful, so thank you. Is there any data or insight into the 100 or so shareholders that you engage with in terms of, are they solely investing to advocate and investing to maximise returns, or other reasons, and have since shifted their mindset? I think you kind of just answered this, but did you want to...
Well, no, so I don't have any. It's a great question, actually. In terms of our retail shareholder base, so our shareholder community, I don't have data, but my guess is that most are invested in, say, a self-managed super fund or something. So the performance of the stocks is not unimportant, but I would say that we do have quite a lot of shareholders who have maintained a holding kind of against their own morality in order to engage. So I think we've got an interesting so it kind of speaks to the difference between being good and doing good. So you can be good by having a pure green portfolio, but you can do good by retaining a small holding in major listed companies. Major listed companies that are major emitters. So I don't know the answer to that question, but I'll think about it a bit. Actually, that's an interesting proposition to me.
Thanks, Bryn. Shane has asked a follow-up question again around index funds. So do you have an engagement strategy with index fund managers? Are you looking for owners of index fund ETFs or units to provide you with an agency agreement to enable you to engage?
So the answer is yes, we have a very active long-term engagement strategy with index funds. And I don't want to toot anyone's horn too much, so I just won't say which one, but one of the major index funds was pretty helpful in backing our AGL strategy over the last few years. Actually really kind of got on board and made some public comments, and in the end voted their shares in favour of decarbonisation and also board renewal. And I actually think probably that all of the three major index funds voted for most of the AGL board candidates that were nominated by Mike Cannon-Brookes, for example. So in terms of whether we are, so if we wanted, shareholders in ETFs to join us, that would mean that we were looking to explore shareholder resolution strategy with the major index funds. That's something on our horizon. I would say that's a 2 to 5 year strategy. It's not a next 12-month strategy, but certainly it's something we're thinking about. So Shane, get in touch. It's a live issue, but I don't want to promise you that we're going to run a resolution strategy in the next 12 months because we're not.
Okay, thank you. Hope that answered your question, Shane. This is a question that you touched on briefly, actually, when you were speaking earlier, Bryn, but there seems to be a lot of financial risks associated with ongoing investment in fossil fuels, as you talked about, as well as the obvious environmental and climate risks. So are many of the resolutions going to AGMs, are they just about climate and emissions targets, or do you focus on financial risks as well, or do you do both? What do you usually do?
So both, and sometimes even other kinds of issues. So we see climate and financial risk as inextricably intertwined, especially for major emitters. So when we're asking questions around a company's decarbonisation plans, we're asking them because we think that having the answers to those questions is in the interests of value-driven shareholders. Whichever way the answers come down, it assists investors in the company who are motivated by financial reasons. I'm sorry, there's a helicopter going over my house. So those things, I guess, increasingly come together. In the last 12 months, we ran a program of shareholder resolutions, or a couple of shareholder resolutions across companies, asking for them to undertake climate sensitivity analysis and for that to be reported in their financial statements rather than in a separate climate report. Financial statements are, of course, audited and they come with a particular legal character. One of the companies, BHP, resisted that. Another one of the companies, Origin Energy, sort of got around to doing it. So really interesting different sort of approaches across those two portfolio companies there. And, increasingly, well, not, I guess increasingly is the wrong word. So it's consistently, we have seen the lobbying footprint, the advocacy footprint of companies as absolutely crucial to their financial value. So major listed companies like BHP and Rio Tinto, right? They have an enormous impact on the policy settings of governments like the Australian government. And now, because so Rio Tinto is fully divested from fossil fuels, BHP is on its way out of fossil fuels, although it retains some thermal and a large metallurgical coal profile. They are in many ways in conflict with the policy interests of the major oil and gas companies. So we think that better governance around advocacy and lobbying activities of major listed companies would reinforce better financial outcomes for all of those companies that are not pure play fossil fuels companies, if that makes sense.
Yeah, absolutely, it does. We have another question, which is making a comment on recent media reports about carbon offsets and legitimacy of these, as well as the legitimacy of the carbon offset accreditation programs. Do you see the use of carbon offsets as greenwashing? Hard to say in a kind of like binary way, but like the use of a lot of carbon offsets for a lot of purposes is greenwashing. So there are hard to abate sectors and there are high quality carbon credits. Those things are the minority, the tiny minority of
the way that carbon credits are used. But what we see at the moment is like low quality carbon credits being used to offset fossil fuels developments incompatible with a livable planet. And that is full scale, ridiculous greenwashing.
Yeah. Yeah, and you mentioned Santos and your work around the greenwashing. Yeah, did you want to tell us a little bit more about that?
Yeah, so I'm not able to comment, I guess, on the. I'll give a high level overview of the case. I won't comment on the detail because we're in active litigation. So we filed federal court proceedings in August 2021. In the third quarter of 2022, our judge, Jane Jago, who had been overseeing the case and was progressing it, was appointed to the High Court, which is a great outcome for Australia, but it slowed our case down a bit. We've recently had the appointment of Justice Michael Lee to the federal court, and he's taken on our case. We had a directions hearing last week. Basically, so the case is moving again. We have alleged that Santos's decarbonisation plan and its use of offsetting and carbon capture and storage and the way that it describes components of its plan are not credible and therefore amount to conduct which is not allowed under Australian consumer law and corporations law. And the colloquial term for that conduct is greenwashing, right? So we allege colloquially greenwashing. Santos is engaged in greenwashing. We allege that's happened in the materials that they've published and also in the statements that their CEO has made. So we are active litigation. We are seeking a correction of the record from the company. That's the relief that we seek. We want the company to accurately describe what the impact of those technologies will have and the impact of its operations will have on carbon budget and well, I guess the carbon budget goes probably a bit too far, but whether it is credible for a company to achieve net zero in the way that it says it's going to achieve it, we think it isn't, right? That's our view. It's what we've alleged. So yeah, we're hopeful of a hearing this year and hopefully a decision.
Great. There's definitely been a lot of conversation in the community around greenwashing and how to pick it, and you know, it's rife and it's really yeah, I think people are concerned about it. So that's really nice to hear that you're doing something about it, and yeah, it's great. We have time for a few more questions. We had a really specific question around ACCR. So if you had $500 to spend on shares, what shares should I buy to help ACCR in the work that it does? And then can I sell these shares once they've been of use to you and then buy different shares, and which might be of future use? And how do I keep track of all of this?
Okay, so, well, again, the first recommendation I would make is sign up to our Shareholder Hub, and that will put you in touch with Alia Hutchison, our shareholder community manager, who is the source of all truth on this topic. So this is it's dynamic environment, but she can give you the answer. I can give you a list of the highest priority Australian companies right now. And I wonder if I could give you a list in order of how much we would like you to hold them. And it depends on the time of the year. So it's BHP, Rio Tinto, Woodside, Santos, AGL, and Origin. They're the big six for Australia as far as listed companies are concerned. But I would say get in touch with Alia, and in terms of holding for the long term or divesting, look, if you've got $500 to spare, or plus your brokerage fees, because remember you actually are depending on your platform, you're spending $10 every time you buy or every time you trade. So just want to declare that kind of adds up over time. If you're only able to hold that, and I don't want to minimise that contribution, like it's a fantastic contribution and really essential to our work, then Ali will be updating you constantly on how you can do that. But what most of our shareholders do is hold just a couple of companies for the long term. So they're not getting those brokerage fees, they're just holding them. So they might hold Santos and Woodside or Santos and BHP or something, and they hold them over the long term as they're needed. But certainly there's ways to get involved. So get in touch, and we will keep you up to date with the information as we have it to hand.
Thanks, Bryn. And just following on from that, there's a question around gathering support and garnering this sort of like collective movement. So how do you find investors to help join your campaigns?
In terms of retail investors, regular people who hold $500 or more in each listed company, it's through events like this. It's through local councils opening up their wonderful, generous communities to us. It's through book clubs. It's through various different active climate NGOs. It could be just through having a coffee with someone that you meet through. A lot of our shareholders will introduce other shareholders to us. So that's how we meet retail shareholders. The way that we meet institutional shareholders is we have, I guess, we have access to the data that sits behind the companies. So we'll get, for each of the companies that we engage with, we look at the list of shareholders they have, and we methodically go through it, and we work out where those consolidation points are, who's influential. We speak to a lot of major institutional investors, spend a lot of time on Zoom calls, speaking at conferences, really trying to get our strategy and our profile out there. And I will say we've kind of reached a bit of a kind of incredible tipping point, which is testament to the team's work, where we are getting approached by major institutional investors constantly, asking us how they can help, or making suggestions to us about the companies we might like to take shareholdings in next and might like to escalate with next. So we also use social media a lot, and traditional media as well. So real combination of strategies.
Yeah. Well, that's great. That's really heartening to hear that people are that big investors are coming to you. That's really exciting. I had a question that I wanted to ask around, because I was reading your newsletter recently, which I really recommend to anyone on the call to sign up to, because it's really great and full of good news stories, which is heartening and awesome. But you mentioned in your most recent newsletter that there are executives of large corporations receiving financial incentives to expand fossil fuel extraction, which is scary. But can you tell us a little bit more about this and what actions everyday people can do to push back against it?
It is pretty astounding, right? So there's just been further evidence of it in the last day or so. Santos, Australia's second biggest listed oil and gas company, their CEO, a guy called Kevin Gallagher, and again, I'm just going to say I need to be pretty careful about how I express this because we're in active litigation with the company, but he has what's called a growth projects incentive. So there is a multi-million-dollar bonus for him under the company's remuneration structure if he expands, if he grows into new fossil fuels basins and develops them. This, of course, is incompatible with the goals of the Paris Agreement, as the International Energy Agency tells us. So under Australian law, shareholders have some really powerful, world-class powerful rights to have a vote on companies' remuneration structures. Last year, when this remuneration structure was published, Santos received what's called a first strike, which is more than 25% of the shareholders voted against the remuneration report. That remuneration report remains mostly unchanged as of the last day or so. And so the question for Santos shareholders is, will you give them a second strike? 2 strikes on a remuneration report takes the company to a vote, or takes the investors to a vote on a board spill, the spill of a board, so where all of the positions are declared vacant. The company then has 90 days to have a vote on all of those positions. It's never happened before, certainly not on a climate issue in Australian corporate history. Who knows what Santos shareholders will make of this, but more than 25% of Santos shareholders last year voted against the REM report. It remains largely unchanged this year. I expect that they may receive another strike. So it's 25% threshold for the strikes, but then it's a 50% threshold for a board spill. So it's whether, I think it's probably, I doubt that threshold will be reached, but who knows that, investors may rightly be concerned about the future expenditure of their capital on projects that are not aligned with a livable planet, which means not aligned with a proper assessment of financial risk.
Yeah, it's back again to that question about risk, climate risk and financial risk, and how it's all wrapped up into one. I think we've got time for one more question. Can ACCR make a bigger impact if your 100 shareholders hold a higher value of shares? Or can you have the same impact with 100 shareholders who hold $500 each? So
the practical answer to that is the latter, actually. It doesn't, so we can access the right with 100 shareholders holding a minimum shareholding. And that's quite a nice luxury, actually. We will have a much bigger impact if you've got individual shareholders that all have $500 each, or $1,000 or whatever. We're not talking about hundreds of millions of dollars in shares. But if we have a good 100 of those shareholders, and then we have a handful of major institutional investors, super funds, asset managers, we find our best allies, our strongest allies, who are able to take the most action in a range of parts of the investment sector. So we've got a publicly traded hedge fund, Man Group, who work with us really closely and do incredible work. HSBC Asset Management, and then closer to home, Vision Super, who is a superannuation fund, I think, for the Victorian local government sector. They are absolutely, hand on heart, the best, the most incredible climate stewardship team among asset owners in Australia. So if we can band together with them, then we're really powerful. But it doesn't matter so much as to whether we've got 100 shareholders holding 5% or 100 shareholders holding $20,000 each. Sorry, 100 shareholders holding $500 or 100 shareholders holding $20,000. Might make a difference if we had 100 shareholders holding $100 million each. But these are kind of economies of scale. So just getting in at that minimum trade is super, super helpful for us.
Right, thanks, Bryn. And there was just one quick follow-up question, sorry. I know I said it was the last, but one more. A follow-up question from Pam. Which are the two companies you would put at the top of the list in terms of shares to buy? I know you touched on this earlier.
Oh, okay. I'm just thinking forward. So second half is, so I'd say that we're, I'm just trying to think of whether the timelines have closed for, well, so if you could make a trade in the next day or so, I would buy Woodside and Rio Tinto. If you can make a trade in the next month or so, I would buy BHP and AGL.
Thank you. All right. Now, just to sort of wrap up tonight, I had one last question for you. So if you were going to summarise 3 key actions that we can take away with us tonight around taking climate action through our financial behaviour, what would those 3 hot tips or 3 key actions be?
Join our shareholder community, get in at a minimum trade on one of our portfolio companies, and then work with us. Second would be tell your friends, really, tell them. And third would be get them to tell their friends. So sorry, that was very uncreative, but just directing you back to the ACCR shareholder. No, okay, I'll do a third one. Tell your super fund. So there's a really interesting thing going on at the moment. There are other organisations. I know you heard from Market Forces last week, and Market Forces advocate for divestment and divestment by major super funds from heavy emitters. We obviously take a different tack to that. If you're motivated to tell your fund to divest, then you're motivated to tell your fund to divest, right? I'm not going to try to convince you of something else other than I've spent an hour talking about why you might not want them to do that. But I think, if you put to your super fund and you say, if you're not going to divest, then make sure you're using the rights you have as shareholders to vote, to file resolutions, to file member statements. Please show me the evidence that you're using those rights in the right way. Like, don't tell me that you're just having private conversations with companies and they're listening and everything is going fine, because that's something that members hear from super funds all the time. And nothing is going fine across those 6 companies that I spoke to you about. Like, there are improvements being made across 4 of them. So BHP, Rio Tinto, Origin, AGL, I would say that there are useful conversations that are happening there, but they could probably be accelerated. And I believe they could be accelerated by shareholder action. Santos and Woodside, there are no useful conversations going on there. Like, there is a real need for Australian superannuation funds to escalate. So if you're trying to help your super fund prioritise on which funds to publicly escalate on, as in, file a resolution or join with us to file a resolution or a member statement, or, really go out swinging, Woodside and Santos are the companies to get them to zone in on if they hold them.
Great, thank you. Yeah, and I think from the session last week and from tonight listening to you, that really strong engagement message is coming through loud and clear. So I appreciate that. Yeah, it's all about advocacy and engagement. Thank you. All right, so it's really good advice. Thank you so much, Bryn. We just wanted to share your slide about how to get in touch with ACCR and for people to follow up with any of those things that we've talked about tonight if they wish to. I think that, I think sometimes we hear these stories about big businesses and big corporations not acting urgently enough on the climate emergency and acting in a way that's good for all of us. And it can feel really overwhelming, I think, and completely out of our control. But I feel like tonight you've given us some really tangible positive ways that we can take some of that action into our own hands. So thank you so much, Bryn, for being a part of this event and for coming and speaking to us tonight and answering all of our questions. And thank you to you and to your team at ACCR for all the amazing work that you do and the contributions that you're making to a better planet for all of us. So yes, we also have, so genuine and heartfelt thank you to you, Bryn, and a huge thank you to everyone who came along tonight. We're really grateful to all of you for taking an interest in this topic and for asking really great questions and engaging in these conversations about the different ways that we can take climate action. If you're interested in hearing more about Yarra and the actions that we are supporting, have a look at our Take Climate Action webpage, and we also have a Yarra Environment newsletter that goes out monthly, and you should absolutely sign up to that to get an email into your inbox at the start of every month. I'm going to just use this opportunity again to do a bit of spruiking. So we've got some great events coming up in Yarra, like taking climate action through our financial behaviour is one way that we support the community, but there's also taking climate action in lots of different ways, and in March we've got some awesome events. Taking climate action through the food we choose is really important, and so we're running a great event discussing the future of meat and dairy and hearing from scientists about some of the alternatives that are being explored to traditional animal agriculture. We've also got a super fun event with Nornie Barrow, who's the head chef of Big Esso and the owner of Mabu Mabu, an Indigenous-owned food business and restaurant. Nornie's going to be running a plant-based cook-along, we're going to be cooking a plant-based dish, Hasselback yams, I believe, with macadamia dukkha. And she's going to be telling us more about how to incorporate native plants into our diet. And yeah, we'll send you the ingredients list beforehand, and then you can cook along online with Nornie. So that will be really fun, and we encourage you all to sign up for that. And if you're interested in learning more about how to make your home more energy efficient, we also have some great events coming up around solar for apartments and making townhouses and apartments more energy efficient and sustainable. Great. So that brings our webinar to a close tonight. If you have any family or friends that you think will be interested in what we talked about tonight, the session has been recorded, and we'll be putting it up onto our website shortly, so in the next week or two. We have a 2-minute survey that we've sent to your inbox. And we would really appreciate you filling it out. It's really helpful for us to collect your feedback about our sessions. We'd like to, again, say thank you to Bryn. Thank you to everyone for coming. And we hope you all have a really great night. Thanks, everyone. Good night.
Thanks, everyone. See you later.
Thanks, Bryn. Bye.